Okay, peeps, welcome back. So today we're going to be talking about the Bitcoin bull market bottom indicators, part one. Let's get it. So, what do I mean when I say Bitcoin bottom or bull market bottom indicators? I'm talking about the actual macro bottom on Bitcoin, basically every market cycle bottom in Bitcoin. Why Bitcoin specifically? Because Bitcoin is the rising tide that lifts all boats and the tsunami that crashes all boats. So it's very important to track the price of Bitcoin as a crypto investor or even as a swing trader, um, because Bitcoin is the king crypto, and basically pretty much everything else moves based on what Bitcoin does. It's been this way forever since Bitcoin came into inception back in, I believe, 2011. So let's go ahead and get into it. So the first thing that I'm going to bring up today is the EMAs. I actually need to get rid of the 51 because I don't typically use that unless I'm day trading. So let's get started with the bottom indicators. So the first bottom indicator that we want to take a look at would be the EMAs on the weekly time frame. So as you guys can see, we've only had a few crosses here on the EMAs over time. We had one golden cross here in August of 2021, one death cross in December of 2021. As you guys can see, the market pretty much went straight into a bear market after that. And then we had a golden cross again here in January 2023, over roughly about a year later. So ever since then, the price of Bitcoin has basically more or less been going up. Is it a perfect bottom time or timing indicator? No, it's not. As you guys can see, the price of Bitcoin bottomed out at 15,500 or 15,500, and the cross actually took place when Bitcoin was sitting at about 23,000. So it's not perfect, but again, if you had bought Bitcoin when the cross took place, let's just say you managed to get in here at 22,000, you would still be up in Bitcoin about 62%. So if you bought $1,000 worth of Bitcoin, you'd be up $600. If you bought 10,000, you'd be up 6,000. 100,000, you'd be up 60,000. A million, you'd be up 600,000. I mean, you guys, I think you kind of get the point here. And this is not even, we're not even in the bull run yet. This is just the actual EMA cross here. So we're going to go back in time a little bit. As you guys can see here in May of 2020, this was the month of the halving in the previous Bitcoin cycle. So it was literally the exact month that this cross happened. You can see we were sitting at $8,000. If you had bought in on the cross and basically held until the death cross of the following cycle, I got to find out where that was. So right about here, if you had held to the top in this resistance area, assuming that you know how to do support and resistance zones, you basically would have been up about 600%. So six extra money. If you had $1,000, you would have made 6,000. If you had 10,000, you would have made 60,000. So and so on and so on. If you had $1 million, you would have made 6 million. But if you had held till the death cross, so death cross took place here, but the price was actually all the way down here, you still would have made 327%. So you would have made a little over 3x. But you could have really maximized your gains by using the EMAs in confluence with support and resistance zones. Because the EMAs, while they're a great indicator, they're not really meant, in my opinion, to be used by themselves. They're more of a confluence indicator, meaning that you want to use them in congruence with something else. So we'll take a look at some of these other ones. So you can see Bitcoin was kind of chopping around here. You had a golden cross, then a death cross, then another golden cross. This has happened throughout Bitcoin's history. Typically, when you get three crosses like this, price usually goes up after that. So had another golden cross right here in 19. April 19, you can see the price of Bitcoin really took off from that point. So we'll just say that this was the price. So 5,000 up to the top, you would have made about 171%. So again, on $1,000, you would have made about $1,700. So that's a pretty good return in my opinion. But then you have your death cross here. You can see how rare these occurrences are. They're pretty uncommon on the weekly time frame on crypto. This is basically the time frame that we would use for a macro cycle bottom, or to make like those ridiculously huge gains that we're talking like massive, massive gains here. We're not talking like a small amount. So the previous cross, going back to 2015, you were basically at $250. So I am going to, let's see what this month was. This was October 2015. So if we go from October 2015, let's just assume that you held from that point. Okay, we'll say you bought Bitcoin at $400. Okay, and you held, let's say, to these candle wick highs right here. You didn't even hold to the top, which would have been a 4,800% return. You would have made about a 50x on your money. Let's say that you held to these candle tops here, you used some resistance zone to kind of figure that might be where the top is. So you made about 4,100%, or basically about a 41 extra money. If you only put $1,000 in, you 41x, you would have made 41,000. Okay. If you put 10,000 in, you would have made basically 410,000. And if you put 100,000 in, oops, try that one more time. So 100,000, you basically pretty much would have made 4.1 million, and so on. If you put a million in, you would have made 41 million, and so on, so on. I know it seems crazy, but these kinds of things actually do happen in crypto during the bull cycles, which is why a lot of people get into it. So that would be the EMAs. Now, as I said before, it's a good idea to use that in congruence with support and resistance, which is going to be our next indicator. So support and resistance, because this is the bottom indicators, not the top indicators, we're just going to look at support. So you can tell basically this is our macro zone here. So this was basically where Bitcoin hit resistance, and then it came back up here, as you can see. The previous cycle peak is another good indication. If we drag this thing all the way back here, you'll see why it's such an important zone. So basically, you can see our cycle top here in 2017 became resistance here, and this kind of micro bull market top here kind of got pushed down a little bit right here before it went higher. But you can see we flipped this from resistance into support now, which is where we bounced at the bear market low here, and we've been moving up ever since. So if you had basically gone back in time and said, okay, we got a major market cycle top here, we got a small top here, got held down here, where would I be looking to buy? On the macro bottom, basically wherever these previous peaks were, because you want to see resistance turned into support, and that's exactly what happened. And then this, you can see that this support level here turned into resistance, so we may see a pullback here, but we'll just have to wait and see. And we can do the same thing over here on basically the previous cycles into the 2017 cycles. So if we go ahead and pull up the zone here, we can pretty much kind of configure whereabouts the resistance would turn into support here. So this would have been the 2013 top at 1100. You can see it got kind of shut down here and dropped down again, got resisted here again, another resistance here. So basically at this point, you see this peak here and you'd be saying, okay, so we got resistance, resistance, and more resistance here over multiple years. Where would I want to get in and buy? Basically, pretty much in this zone here between 730 to 1200. Is that a perfect bottom indicator? No. But let's just assume that you bought at the bottom. You were accumulating pretty much all in the zone here, and you got like an average price of, we'll say $1,000. You would have made about 1,700 from the bottom to the top. So again, if you only put $1,000 in, you basically would have made about 17K. Now, am I shilling this? Am I trying to say you guys should buy into it? No. I'm not recommending anybody buy Bitcoin or anything like that. If you choose to do that on your own, that's fine. That's your choice. Do your due diligence. Understand what you're getting into. Crypto is very high risk, high reward. There is a possibility you could make a lot of money, but there's also a possibility you could lose all of your money. Okay. Not only is crypto risky, but there are also multiple, scams and or rug pulls out there. that do happen to investors that happen to get into the wrong coin or click on some malware or something like that. So just understand that. So the next indicators we're going to get into is the Google Trends. As you guys can see here, this is very simple. So we're basically looking at, well, we'll start with the Bitcoin version first. So we're looking at Bitcoin. You want to basically look at the past 5 years because, crypto cycles are 4 years long. So pretty much what we're looking for here for the bottom is, I would say for Bitcoin to sit anywhere roughly about a 10 to a 15 would pretty much indicate that we're at the bottom of the bear market cycle. So you can see here, Bitcoin sitting pretty much between, well, in this case, I guess it would be 13 to like 20. So that's not quite as low as we saw before. But, as crypto becomes more commonplace, more mainstream, it's probably not going to go as low. But as you guys can see here from the bottom at 12, we have run up to 27. You get your bottom here in April 2022. And then Bitcoin had this huge rip again to the upside. That was a bear market rally, basically. You guys can see that we had some spikes here before the big 2021 bull run. We were at 11 and then we took off to the upside. So that's what you would look for on the Bitcoin piece. Now on the crypto piece, this includes Bitcoin and all of the cryptocurrencies, not just Bitcoin. So if you're in altcoins or Ethereum, this is good to look at. This would be the same thing, but for crypto. So pretty much what we're looking for here on the Google Trends is anything from, like, I would say about a 2 to maybe as high as an 8 or a 10 for a long period of time. That would indicate the bottom. As you guys can see, pretty much once it took off from that point, we went not immediately, but we did eventually go up to 100. Then you kind of had this 50% drop here in July on Bitcoin in 2021, as I'll show you right here. So that's pretty much this zone right here, May to July on Bitcoin. We had this huge drop and then we ripped for a second peak. So you can see that the Google Trends went down significantly. And then, of course, your retail FOMO, aping in, diamond hands, moon boys, decided to get back into the market and start pumping the price back up here. And then the hype came back, and then we hit the actual bear market when the Fed said they were going to raise rates. And as you guys can see, we have kind of been sitting in that general area. Not exactly, but basically this whole time between December of 2022 up until recent months has been a great time to accumulate based on this metric. So there's a couple more things we're going to look at. We're going to take a look at the MVRV score. We did this one on the bull indicators, but it can be used in reverse too, as you guys can see here. So the Bitcoin chart itself is the blue line, and the MVRV score is the orange line. Whenever we're in the green zone, that's historical buying opportunities. Whenever we're in the red zone or getting close to the red zone, that's historical selling opportunities. Okay. Green basically means the perfect time to buy. Red means the perfect time to sell. So if we take a look at these Bitcoin bottoms here, you can see that they pretty much line up almost exactly with the MVRV scores. So down here would have been the perfect time to buy in November of 2011. Then you have another pretty good opportunity here in roughly about July of 2013. Great opportunity here in January of 2015. Another one in, let's go back and look at that. So yeah, that was pretty much the cycle bottom for before the 2017 bull run. And then December of 2018 was when the MVRV score hit the low. And you can see here, Bitcoin was at 3,600. That was pretty much the bottom for that cycle. And then we got the Rona dump in March, which sent the price of Bitcoin down to 5,000, but I think it was actually lower than that. I'm pretty sure it went to about, I think, like 4,000 or 3,600. And then pretty much all between, I would say, roughly about June of 2022 to December of 2022. This was in the green zone, so perfect opportunity to buy. Now, the MVRV score has moved up a lot. It's sitting at roughly about a 1. Does that mean that it's time to sell and take money off the table? Well, it depends on what you want to do. If you're a short-term holder and you just want to make some quick gains, then maybe the answer is yes. It depends on you. But us personally, we want to wait until it gets closer to the top up here, roughly about, I would say, starting at about a 6 or a 7, maybe as high as an 8. We'll start taking a look profit. or looking to take profit, I mean. So the last indicator that we're going to take a look at here is real simple. So I'm going to go ahead and get rid of the EMAs here. We're actually going to put in a simple moving average. So an SMA is different than an EMA. It's not the same thing, just so you all know. So the we're going to look for, or we're going to use on this one is the 200-week moving average. This is actually, believe it or not, this is pretty commonly used among long-term crypto investors. We're going to show you why here in a minute. So if we go back in history, and of course we really got to zoom out here because, crypto is just that parabolic. So if we go basically back in history here, you can see that the 200-week moving average has been a great buying point. As you can see here, we're pretty much sitting at the bottom here. If you had bought here at $244 and held all the way to the top of the 2017 bull market, you would have made about 100x on your money in Bitcoin, which, let's say you had 100 Bitcoin, you would have, and it was $200 a piece, that's 20,000. So you would have made $2 million off of that run. And you can see here that it held firm in 2018. This was pretty much the bottom. And then boom, we spiked up, went to 13,000. And then when the pandemic happened, we didn't hold it perfectly to a T. This was kind of a fake out, I would say. These two little wicks here, this is what's known as a tweezer bottom. This is typically a very bullish indicator, meaning the price has a strong chance of reversing to the upside. As you can see here, we have the opposite, these two long wicks. That's what's known as a tweezer top. That's bearish, and the price did dump from that point. But the 200-week more or less did hold the price here, and we ended up going up massively after that. So if you had bought at the 200-week and held to the top, you still would have made roughly about a 13x on your money. So if you put $1,000 in, you would have made 13,000. And so here's the tricky part. So it did not actually hold on the 200-week SMA here. As you can see, we kind of had a fake out to the bottom, but then it came back up. Now we're actually going to add another SMA in here. I'll show you guys why in a minute. So the 200-week has been basically a perfect indicator up until this previous bear market. We had this fake out. However, if we keep adding indicators here, another one, we'll call this one the 400 week moving average. There we go. You can see that basically the price held pretty much between, so the blue one is the 300 and the purple is the 400. You can see it pretty much held in between the 3 and the 400. If we go back here, you can see that the 300-week moving average held perfectly for the pandemic dump. And we didn't really need it before then. So, but if you use these indicators in confluence with support zones, you're pretty much going to get your, I wouldn't say perfect buying opportunity, but it's a great opportunity to buy. So, but I mean, in all honesty though, if you had bought Bitcoin, let's say back here at the 200-week at 22,000 and just held, you'd still be up 70%. So you would have almost doubled your money just for buying at the 200-week every time it sat at the 200-week, and then pretty much just held from there. Even from here, you still would have made about 50%. So these are the Bitcoin bull market bottom indicators part 1. Hope y'all enjoyed this content. Hope that it was helpful. This is still relevant information because we are still technically in a bear market. I mean, it's not actually a bear market per se because we are moving up, making higher highs and higher lows, but we're not past the Bitcoin halving yet. So anyways, hope y'all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.